Hey, good morning. This is Vance out of Seattle, Washington. It's Wednesday morning. Welcome to my live Forex trading show. I have a lot to cover with you this morning. I'll be talking about the fundamental outlook. For those of you new to the show, this is the sentiment in the market. Fundamental sentiment is just basically the tone that investors, the story, I think of it as the story that's being told. You know, like I think I remember it was Wednesday or Thursday, but they released FOMC, and as part of the ongoing story, that kind of reversed things because they started talking as though their global concerns in Asia were going to delay them raising interest rates, and so the market took a big turn back up the other way. So there's a little bit of the story that comes out each day, and we're, as traders, part of what we need to do is piece that together to arrive at that fundamental sentiment on direction. Anyway, I'll talk about that. I did want to point out to you to see more of what I'm talking about on the show. Let me bring this up here. Here's where the show plays. And when you click play on the show, you'll see this be part of the conversation pop up. Be sure to click on that, and you'll see more of the stuff that I'm talking about. If you like something I'm talking about, you can applaud by thumbs up or whatever. We're going to be adding more interactive things so that you can interact and ask questions live on the show here pretty soon. But I'm going to be referring to these links in a little bit. In fact, let me just get that out of the way. I do these shows Monday through Thursday around U.S. Open. I'm starting a little earlier today, but I don't really email about every show. Emails become very unreliable, even double opt-in, and even when you say, yeah, I want it, half the time they don't get delivered. So if you want to know when I'm doing this show, you know, a few minutes before, just follow me on Twitter at this link right here. If you don't have a Twitter account, just get one. But you can program it to let your phone know. Currently, I'm not sending out, occasionally I'll send one, but pretty much 95% of the tweets are just about the show. And so you can put that on your phone and you'll know a couple of minutes before I do it. Also, if you go to this link here, takes you to my website, forexartofwar.com. And what that looks like is this. Oh, I need to log this out so you can see. Yeah, I want to log out. I wouldn't have clicked the button if I didn't want to log out. Up here on the right, these are very popular, tens of thousands of downloads, 8 things, and the first battle. So that'll explain why there's such a culture of failure in Forex trading, and also give you a good start in terms of building a foundation. So do get that. I don't send a lot of emails. I mean, I get about 300 spam a day myself, which I have to sort through. So I understand. And also, there's RSS feeds down here for each thing we post. All right. So let's get back to the market. I do have one more thing I'll tell you about at the end of the call, but let's talk about the fundamentals. A friend called me, a pretty well-informed friend, and he asked me what I thought was going on. That was yesterday. And I said that I think we're taking one more step closer to normal. And it began a few weeks ago when it appeared like there would be some divergence in interest rates between the U.S. dollar, the United States, and currencies like the UK and the Eurozone. And of course, I'm referring to investor perception. So what began with perceived market divergence, and again, I'm talking about the interest rate differentials, was reinforced by positive information coming out of the U.S. and further poor information coming out of the Eurozone. And then when the U.S. last week tried to change the interest rate expectation, kind of push it off probably into the first quarter of 2016, they cited that the U.S. was strong, but global concerns could delay that decision. Well, I think what happened is the market took this as further evidence of a U.S. recovery. And so they got a little bit more excited about investing, and a little less, and began to unwind some risk aversion positions. Now, if you're looking for some kind of sign that this is true, consider that when all this began in 2008, when the greatest period of uncertainty was upon the markets, investors didn't know what was going to happen. But what they knew was that people would still need energy, food, and entertainment. And that's why everything that we have to buy has been going up in price since then. I think what you're seeing now is the second unwinding of high risk management. The first one came in November of 2012 and then accelerated in January of 2013. So I think this is the second unwinding of, you know, higher risk situations. So the money is coming out of energy, for example. You're seeing a lot of drop in oil rates as one example. So this is what I think we're seeing. I think we're seeing a vote in favor of a stronger U.S. economy, and more importantly, a divergence between the U.S. dollar, the U.S. and other markets globally. Now, all of this is good for us Forex traders because it increases volatility. Increases in volatility. Volatility is good in Forex trading, in case you're new. But this increases our frequency of opportunities, and it enables us to hold trades because we get more confident that price is going to move farther in a trend. All right, so let's before we talk about what affects your probability of winning, let's take a look at current price. Let's see where we're at here. The euro, as you can see, if we're looking out, you know, 5 days, has been slowly compressing into this range, but the overall trend is down. But we're in a bit of a wedge here right now over 5 days. So there is a little bit of uncertainty right now. What this is telling us is that investors don't know if we're ready to swing down to the bottom yet or continue up a little bit with more of a correction. So that's going to be answered in the next couple of days. But right now, if we zoom in and look at what's happening today, what we see is price became exhausted here at the bottom yesterday, near the end of maybe the middle of the Asian session, very small moves, and then starts to correct up. You can see a lot of, you see the wicks, and there's a lot of sellers thinking I'm going to get back on. But there were enough buy orders sitting here that it just didn't go anywhere. It just stayed right around here. And then then later on, later in the London session, it started to reverse up. So I think the key level, this is a really important level here at 2671. And I'm not sure why I've got that moved up higher, but anyway, I think this is the key level. But you need these moving averages to turn over. But clearly the buyers, when this closes above this level, which it may do in this next period, the buyers will begin to have an advantage. Now, keep in mind, there's a lot of sellers still looking here, so there's going to be a little bit of opposition. So if you do trade in this area, if your trading plan is such that it allows you to trade in this area, you know, make sure you know that opposition is going to be there, and what that does is that increases your risk. So you need to get a little bit better price. But our team would need for these moving averages to turn over, which is just a simple way to represent whether the balance is shifted to the buyers or the sellers. And right now, it's still just slightly in favor of the sellers. Although I'd say if I was using my experience to calculate this 2671 is right on the border. So that's the euro. We personally would need this to confirm a cross before we would consider a trade, but there's a lot of room to get into a trade here if that happens. On the bottom, pretty simple. Look for a move below 2628. At some point, the market is going to make another move. I should say it's very likely to make another move at 2500. So we'll just have to watch, and I can't get that to move where I want it to. I guess all of the devices are too close to each other. But anyway, so we'll be watching for that move. Let's go to the pound real quick. The pound is very similar to the euro. It's the dollar moving the market. So same thing. Well, it's different in terms of the trend. There's been a very, very strong move down. So let's see what this last trend was. This last trend was about 213. You know, it might be ripe for a deeper correction. This is not necessarily the buyer-seller turnover point. That probably will happen somewhere in here. But I just wanted to point out that this is a really important level, 16,000. There's going to be a lot of sell orders sitting in here. So keep that in mind. And then as far as move to the downside, be about right there, 158.78. Okay, so let's zoom in on price a little bit. Again, we've got a trend down, but we've got price just a little bit bullish and kind of pushing up this morning. So this makes a no trade for us. We're not going to trade against the volume of money that's tilted to the downside. We're just not going to do that. So that's really about it. I mean, one of the things that you've got to think about today is there's just a little indecision in the market. There's been a lot of selling and a lot of buying, and now it's like, okay, what's the next piece of this story? And the market doesn't have that yet. So, and we're kind of in the midst of a little bit of a correction here, stall correction, and so we need the market to make another move, right? We need it to make a move and pick a direction. All right. So next, I want to talk about the elements that affect your probability of winning. I'm just going to put them up on the screen here. One of the most important things that you can learn to do in Forex trading is determine your probability of winning. And you must know how to do this, because if your winning ratio drops below 70%, you'll be faced with some disabling psychological issues. And we call that the psychology of consecutive loss. And I'll talk about that on another show. Now, I'm not doing anything formal here. You can just see I typed up a sticky note. I'm just going to talk off the top of my head. But here are the elements that are involved. Market conditions. And again, we're talking about what affects your probability of winning any trade. We've got market conditions, we've got price direction, and then we've got your entry and exits, your stop, your entry, and your, we'll say target, because stop is an exit as well. So these are your 5 key elements, and I've written a great deal about this and shared it many times. But one of the things that I had to do at one point, when we first released the Forex Art of War program, which is using the art of war principles, not to win in the market, but to use those principles to help you win in terms of learning to do this. So in other words, the strategy used the art of war principles in order to help you learn to do this. And as part of that thought process that Sun Tzu taught me, who was a general about 2,500 years ago, he taught me to really look at everything in terms of, you know, what affects your probability of winning? What affects your ability to execute well? And so these are the types of questions that basically, you know, pulled back the curtain and allowed us to see how this really worked in terms of learning and what you need to learn to do. So market conditions are things like the fundamental sentiment that I talk about when I opened the show today. It's the time of day, you know, the optimal time of the day is London session. You know, London open to London close. And the U.S. people, investors, they come in the morning, they're done by lunch usually. So they're kind of almost done by the time London closed. So London open to London close is the best time. So that's time of day. You can trade any time of the day, but keep in mind that trading at a different time of the day is a little like trading other currencies. Like, for example, the Australian dollar and the Kiwi, they move very much differently from the pound dollar and the euro dollar. So all of this is probabilities, and all of this is logic. And logic is always based on human behavior. So what is the behavior of the people from during the London session? It tends to be the highest volume of activity, and it tends to be the most consistent activity. That's the behavior, that's the logic, and that's why we choose that time. Market conditions would also have to do with high impact data, you know, and every day I write a little bit about that. Let me show you where you find that right here, High Impact Data Wednesday. If you were clicking on that, you would see some thoughts that I have, data that's coming out. There was a lot this morning, and so you have that as well. Oh, we do have some U.S. data coming out that just came out about 1 minute ago. So we're getting a little bit of movement. Maybe the traders and investors were holding off for that U.S. data at 8:30. So they're making a bit of a move right now. So I'll go back to looking at price in a moment. So that's market conditions. Price direction is probably the easiest thing. And this involves a pattern that you're looking for, pattern of behavior, and then the likely potential. And what that has to do is with the strength of the move. So let me give you an idea of what I'm talking about price direction and likely potential. First of all, price direction, the most repeated pattern in Forex trading, the one that you can rely on the most, see the euro's making a nice move here. And we've got an opportunity to see it right here. Now we're going to assume this trend is up. What we're looking for, let's say the trend is crossed over up. We know the price direction is likely to go up. The next thing that we need to know is how strong is it? Now, the pattern that we're looking for, and this is not the only pattern, but this is the most reliable, is whenever price moves in a particular direction in a strong way and pulls it at some point, it will pull back to 38.2 or more, like it just did, and it will make another push in the direction of that price move. Now, like I said, there's other patterns, but this one is the most reliable. So let's just talk about the context of calculating your probability of winning using this pattern. So we had market conditions, and now we've got price direction. Trend is up. Now the next thing we need is the strength of this move. Now the strength of this move right now is 34 pips. Now, using logic, which is all the past behavior of human beings, we know that the noise level in Forex, that means any transaction can move the market up or down, you know, a bunch of payroll being calculated out of Japan or whatever. It's around, you know, 16 to 22 pips. Somewhere, I usually put the range of noise. If you're looking at 20 pips, you're a little bit outside of the range of noise. So it's got to be a minimum of 20 pips. Now, looking at this pattern, how do we know what the optimal target would be? And this is where I need to tell you, let me bring that back up, that see, each of these things affect your probability of winning. Price direction, market condition, stop, entering target. So there is a probability associated with your stop loss position. There's a probability associated with your entry, and there's a probability associated with your target. There's also a probability between the relationship that all three have with one another. But let's keep this simple. Let's talk about the target. What is the optimal target for this pattern based upon repetitive human behavior? The optimal pattern for this target would be at the close of this 5-minute candle, provided that the next candle does not close, you know, like 75% back. But anyway, what you're going to see most often is you're going to see price like it's on the move right now. It's going to bounce around, and then there's going to be a resolution of a 5-minute candle body. Let's say it's, you know, it's moving right now. Let's say it ends up right there. That will be our optimal target. Now, just like there's an optimal target, and let me explain it just a little bit. The reason why that's the optimal target is because price will tend to move, like I said, pull back and push again in the direction of the trend. But as it gets to the previous high, in this case, the resolve of the buyers will start to fade a little bit. They know it's pushing again, but they're not sure if it's going to go farther, right? And so there's some kind of fine line here. And the most common, without getting into the nuances, would be the 5-minute candle body close. So we know that's the optimal target. All right, now, where is the optimal stop loss? Now, this answer is going to be different for different people, but absolutely the most optimal stop loss is going to be the place where price previously launched out of, right? So we call this the former support area. It's the last advance of the trend, which is right here. But the Euro's distracting me here on the move. And so so this is optimal. Now, there are nuances, like what if we've got a very, very strong move like we have now? Well, price is likely to pull back to maybe 38.2 when it does pull back. And price is the optimal target. Whoops. Optimal target is likely to be, and I wish this would stop moving on me so I could show you something solid. Let's say the 5-minute candle body stops there. So what traders will be doing is saying, hey, in these conditions, can I get away with my stop loss being there? And so if you're experienced with this and you're able to determine that this is going to remain bullish and not see a lot of reversal, your stop loss is okay closer. But typically we won't see really strong, fast moves like this. We'll see a move that came up in here, you know, let's say about our original area, and you'll want to get your stop loss below this. But the probability that stop loss is the safest below that former area that the buyers took off out of. Okay, so that's optimal. Optimal up here, 5-minute candle body close. And then basically you have to choose a risk to reward ratio. And I can tell you guys from years of experience, the optimal risk to reward ratio is 0.75 to 1. It actually makes more money than 1 to 1. But keep in mind that when you're choosing your risk to reward ratio, make sure you don't try to run before you know how to walk. And what I mean by that is make sure you have all the skills to make consistent profit first. And to do that, to achieve that goal, one of the things that we've designed in our program is we want to make it as easy as possible for you to win. And so this is part of what we do here. So what I was encouraging you to do there is don't try to go for more pips. Try first for the goal of making consistent profit over a series of trades using complete logic. And I can tell you right now, choose a target of 0.75 to 1. That means you're risking $1 to earn 75 cents. And what this will do is this will give you the highest number of winning trades based upon the pattern that you're trading. And also it'll keep you, it contributes greatly to your risk to reward ratio. All of this has a relationship to one another. Okay, so that was me talking off of my head about the 5 elements that affect your probability of winning. I don't think the fact that the euro was launching up here was helping me make it simple and clear, but I'll put something together again and lay it out in a future show. So I wanted to share one thing, and I'll put this note back up there. This is an example of what you need to learn to do. And you will hear almost no one talking about what I just told you, even after all these, 13 years of retail Forex trading. You just won't hear this. It's just not favorable to making it look easy so that you open live accounts. But this is one of the things that you need to learn how to do. And I want to tell you something. Out of the last 10 years, out of thousands of people, no one has ever asked me what affects their probability of winning. It's kind of like no one ever, it's people sitting around a poker table and no one ever asking, what beats what? Does a pair of kings beat a pair of jacks? They just never ask that question, right? And it's a fundamental question. We got to know the answer to it in order to win. So part of the reason why this goes on is because people don't think of Forex trading as a real skill, something you have to work at and develop. Most people want to believe that it's somehow different from other things in life, but it's not. You have to know how it works, and use the baseball analogy. You have to know all the basics of where to put your feet, how to hold the bat, and then you have to swing, and then you have to improve on what you learned how to do. And the baseball positions, the hands on the bat, the feet, proximity to the plate, the direction you look, the bent knees, all that stuff, that's the logic. That's the behavior that's common to all people who hit a baseball. But when it comes to being good at it, you have to have that logic complete and then swing the bat over a period of time, and based upon what you experience, improve how you're doing what you do. And that's what I mean by it being a real skill. Most people aren't even starting the process of doing that. By the way, if you like this kind of instruction, we go way farther and we coach. Like, for example, when you trade in our program, and we haven't opened it up for a couple of months, but when you trade in our program, we're like the coach watching you swing the bat and saying, hey, we watch every single trade. So it's us watching you, not you watching us. And so we say, hey, you did great there, but work a little bit on this. And you just keep working at it until you get it right. And none of our traders trades exactly the same. Everything, when it comes down to trading successfully, you need a setup that you see well. You got to have all the logic right. But again, you're not going to trade it exactly the same as anybody else. As I said, we haven't opened up our training program for a couple of months. It's opening this coming Monday for a handful of people. So be sure to write to us if you'd like to learn more about that. We're going to be making a really great offer to a handful of people. Just write to me if you'd like to learn more. And I think you'll find the offer unbelievable. So if you're thinking about getting into a trading program, do take a close look at this, because it's going to be an incredible opportunity. Also, let me just show you, if you want to see what all's in that package, you can click on the link here on the show on the top right. Again, that was join the conversation. There's a link right here. It's the only place you'll be able to find it, but click right there. and you'll see it is an exhaustive course. And when you find out the price, you're going to be like, what? So anyway, sorry to seem like I'm selling so much on the show today in terms of promoting the program, but we really don't open it up very often. And so, I just want you guys to know that opportunity is there, and take a few moments to read about it. And also write to me anytime you want. Vance, let me just put my address on here. Vance at forexartofwar.com. Just write to me anytime with any questions. We're happy to answer those. Okay, well, I've been on here for a long time. I'm going to wrap it up. I hope you guys just got a little perspective and maybe one idea that's going to help you with your trading this morning. Members, I'll see you guys coming up in about 45 minutes. Cheers, everyone.